Hey everybody, Carlos here from Forward Side Effects. Welcome to another forecast video, December 10th, 2013. Let's get right into the forecast review. All right, we were looking for a sell setup on the British pound, sell setup on the euro dollar, and then we were looking for a buy setup on the Japanese yen. Let's start with the British pound. We're on the 4-hour chart. Let's just go to the 1-hour chart. Here's a pivot that I was using earlier. It's closing into the opening of the European session, so nothing actually worked out here. All right, if you noticed, this bar actually closed kind of inside the line on top of it, so I didn't count it, and that didn't feel comfortable. Now, on the other hand, there's also the consideration for us to take. Remember that we said that this was coming in below the level of the 20 area, indicating that the momentum is completely dying out. Now, in order for me to take a sell setup, this was the pivot, but it was far away from the actual pullback that they should have done. So we're talking about that the market is actually about 80 something points away from the zone. The question would be, can we just fade this towards the upper side? And in this case today, I'm going to push you into another level of trading. All right, so let's do that. What we're going to be doing though, it's understanding that price action has told us that this bottom for support, it has been completely retested a couple of times and rejected above it. The close of the bars that actually close above and beyond this most latest pullback over here confirm the intention based on price action. So that means that the earlier signs of reversals are here and it's confirmed 3 times in a row. Let's go over them again so you can learn from it. First, we had the 4-hour chart as a warning signal indicating that the momentum is probably going to die out. Next, on the 1-hour chart, we have the price action activity indicating that the market double dip and retest and failed to take those the lows that we were looking for. And this is the most important retracement that they have. Once price surpassed that prior pivot high, is an indication of a potential reversal based on price action. That's the third confirmation. Now take a look also how the MACD are closing in very steady and heavily. So how are we going to address this? We usually and typically go for a pivot step setup towards this area. How do we do that? If you're going to choose the 1-hour chart, like you see in here, what we're going to do is going to take the highest pivot or the highest swing prior to the most recent high that they've made. If I place the crosshair right on top of it, if I go back in time, we notice that this is a small pivot in here, so you've guessed it that these guys right here are counted as an important point to draw our pivot step. Let's do that. All right, now that we have that, we got our first level of triggering technique, which is a pivot step. Now, since we have enough information on this, meaning we got the 2 points or important points. Now, as a reminder, before I continue on, if you would sustain yourself into the 4-hour chart, you will notice that this is not noticeable as a swing high. See, since you don't see it, you can't see clearly how to choose it. You drop down to a lower time frame. That way we can find it. Now, even if in this case you wouldn't find it either, you go back to the 30-minute as low, and it's a little bit clearer that way. See, that really worked out pretty well. All right, so that's another hint for you right there. So we have the pivot step in place. Now we can predict market movement, and based on this information alone, you're going to flip out up by this one. Based on this information alone, we can project where inside the zone most likely the market will go. Okay, let's just do that. So we go to the crosshair and we create, let me just put the trend line. So we have our good old handy triangle formation, right? Nice. Now we're going to take the highest and the width of the extend on the right corner of the triangle from bottom to top from bottom to top. I mean from top to bottom. And we're looking at 72 points from the breakage. That hasn't happened yet. But if when they do, we're talking about that we got 72 points. So let's just have a rough idea. Let's just assume that they break anywhere around here, and we can just assume in here we got a very nice rough guess because from where the lines are and the angle of the line, it's not pretty much of a difference. Roughly, let's see. We can probably talk about 6 pips, so we're not gonna be that specific, right? So let's just put it like in there, and we're talking about 72, so to round that out to 70. Let's see where that takes us. All right, long and behold, it's pretty much close to the first line or area of the synergy zone, which is a reversal towards the downside. It's a highest resistant point area based on bigger time players or bigger time frames. Okay, so now we know that closing into the 60-40, which is the original synergy zone, which I'm going to leave intact in this place because we're going to use that as targeting, also confirms close to it the target based on price action of the most recent movement that the bridge band has done. All right, I just hope this start making more sense to you, how we are analyzing multiple strategies, multiple techniques to combine them into one systematic approach towards understanding what we're going to be looking on the market. So now we have our blueprint. We have a potential for the market to continue, to stop from the bottom formation, reversing towards the upper side. We have a confirmation of the 4-hour MACD reaching below the levels of 20, indicating that it's a warning that the downturn is about to be finished. Price action confirmed that. That's our second level of confirmation. All right, meaning this double bottom support confirmed that. New higher prices taking the prior swings high, confirmed for the third time based on the new price action and price pattern indication. So that's the third confirmation. The fourth confirmation would be the cross of the moving average, and the fifth confirmation would be a cross and close above the pivot step resistance point area. See how that works out? Those are like 5 layers right there. Next, where are we going to be placing our stop? Well, we already know that. That's going to be below this low right here. And that's pretty much easy to identify, where you can come in and just place your stop right here. How many points? Usually go for 10 to 15 to 20 is what I was suggested. So we'll go with 15. Like it's okay with me. 58.96. Let's see. All right, close enough. So this represents our stop, and our entry would be anywhere around this area. So let's just assume anywhere in here to this level. Now we know that our risk is going to be 80. And you're saying, oh, so we're going to risk about 80 points to gain about 70. Doesn't make so much of a sense. Well, just remember, this is an emergency stop, right? Just in case something happens like in this bar, right, against us, you don't want to be cut off guard, with your open account there so they can take all the money. So you just immediately stop the bleeding right there. Just lick your wounds and get started once again the next day. That's how it works in the world of trading. All right, so this is basically our whole strategy today. Now I'm going to take it a little bit further for you. I'm going to eliminate this bottom area. We don't need it. We're just going to be the top part of it. And since we have these areas of new hires taking in control, what I'm going to do, I'm going to try to recreate a micro synergy zone to see if we can just get this going in a micro way of trading. All right, so we found the potential of a market pulling back all the way to 59.38 and 59.21. Now let me explain something about this. I am playing out the bridge band with the pivot step, not the synergy zone. The reason I'm coming up with the zone is because if you notice, the market is coming kind of in a sideways situation. See? So there is a very highly probability that the market will get and dip within this area and bounce from it again, leaving probably a nicer pivot step on its way. If you notice, I also dropped to the 30-minute chart. That helps me identify swings a little bit further into the road. A little bit earlier into the road than further into the road. So The closer to the zone, the better the opportunities for us to buy at the lowest point. But remember, our stop loss doesn't change. So if you notice now, it makes sense in terms of buying anywhere around this bottom support area, because then we're going to be risking way less than the 80. Makes sense? So it also is going to help us gauge the probabilities for the market doing some swings on its way towards this area. So if that happens, then we're going to take and draw that pivot step, just something like that. That resistance is going to bring us with an earlier entry into the market and a closer stop loss level as well, giving us a better return of our trading. All right. But once again, we're just creating educated guess into the market, considering every single one of the opportunity and options that we have, and create a systematic approach of plan A, B, and C, so on and so forth. So basically, we go back to the 1 hour chart. We're waiting for the break of the pivot step towards the upper side and the cross of the moving averages. But better yet, a second opportunity or a better opportunity would be a pullback toward the area of 59.38 and 59.21. And wait for pivot step for confirmation to enter towards the upper side as well. All right, so one does not cancel the other one. It's just that one confirms the intentions of the other one. What I mean by that is that if prices actually reverse and give us an entry, and then they break above this level of the pivot, we're totally confirmed. We have totally confirmed their intentions of the market. On the other hand, if we break below the 59.21 and close below of it, I will cancel this trade, as it will confirm a complete sideways situation with a further dip into the downside. So I just walk you through the process step by step. I've never done this before in such a detailed way, so you have a more in-depth review of how I analyze the market every single day. Now, we provide synergy zone based on 4 and 1 hour chart. Why? Because those are the ones that the big time players run, and the whole process and situation from us in Foresight FX, that we try to mimic the big time players. All right, but in a micro scale, here's the opportunity when the market is going into a turnaround point. We're not calling, just make sure we're not calling tops or bottom. We're assuming a potential bottom formation is happening right now, and this is the setup that we're going to be looking for, plan A. Or plan B, a better positioning would be creating a micro synergy zone area where it could provide us a better entry using still a pivot step technique to confirm the reversal at that point and have a better positioning of our stop loss. Obviously, we're going to raise our stop just about 5 or 6 pips below this 59.21, and we're still going to be targeting those guys on the top right there. All right, so talk about targeting. Go back to the 1 hour chart. It's going to be the same 60-40 by the breakage of the entry of the synergy of the pivot step. We're going to use that breakage area to measure that 70-point movement that we just calculated based on the width of the triangle. You know that. The next thing, we're going to divide that in two. So we're talking about 35 points from the breakage. Using the same analogy and perhaps same possible scenario, 35 points will put ourselves into 60-14 area or so. And the first target is also going to be 20 to 40 points, whatever it comes first. Okay, so we are basically targeting the same 60-40 or 41 level as our major optimum target price. 50% of the move, I'm gonna round it out for you guys, but watch, I mean, once again, it's your responsibility today to watch this and gauge the actual targeting. But 35 points will put me at 60-12. We're gonna round it up to 60-10. Okay, and that's going to be our second target. Third target is going to be this guy. Third target is going to be this guy. And once we have the entry, we're going to look for 20 to 40 points, whatever that might be. But right now, based on long-term targeting. That's going to be the first one, 60-10, 61-41 area, and we confirm that double time right there would be the beginning of the zone, and eventually the highest is going to be 61.15. So these are the three ones where you're going to see plot me today into the opportunity. Then you're going to see that I place a pivot step entry buy setup. I did not plot the synergy zone. This is for your extra training and enjoyment of using this level as a gauge. If prices come back to this level, where you should be closing out is going to be below the 59.20 21. As a matter of fact, I'm going to measure my 15 points, and that would put me at 59.06. Let's do that. There you go. And that's going to be our new stop. Okay. So here's a complete blueprint for the British pound. Obviously, I cannot do this on every single market because today it's a little bit different in terms of what we found on the British pound. But that's our opportunity for the British pound, is a buy setup against the retracement from, not against, I'm sorry, in conjunction with the retracement that we were expecting this yesterday. Next, we got euro dollar. Now euro dollar pulled back up, came back down, pulled back up, and it's kind of going into a sideways situation. Didn't give us any opportunity. We need to know exactly what's going on. Same thing applying as the British pound, like kind of forming a bottom formation right there. But right there, I don't see a clear path of intention. If you notice, this is a high, right? And every close has been below that high. No confirmation of the intended move towards the upper side. It's more likely like a potential sideways situation. So synergy zone has kept intact anyways. You notice that right there. So we were looking for a sell setup right here, and we go to the 4-hour chart once again, but I don't feel comfortable seeing this going on right now. So it's kind of a mixed feeling, so we stay outside. When in doubt, do not trade. We were standing outside on the once again, take a look at that, on the Australian dollar, and for a good reason. You see, once again, we don't even waste our time explaining that. Forget about it. Last but not least, we have the dollar yen. Now dollar yen gave us an amazing buy setup, although the synergy zone never worked out for us. You see, the pullback area never happened as we expected it to. 4-hour chart, here's a pivot step that worked out pretty well. Second pivot step confirmed towards the upper side. And let me go to the 30-minute chart, which is the only opportunity that we had. Based on that, the closing in to the opening of the market, it's around this pullback over here. So the only chance that we had was a pullback on this pivot using those two small pivots right there. There's no higher than this one prior to that. So this is the only one that we're going to be using. That would be the entry, and this minus 15 would be the stop. Why do we use this instead of the original right here on the bottom? Because of the distance of it. Doesn't make any sense, right? So we choose in this case the most recent pivot low acceptable, minus 15. So we were pretty much well covered right there. The market news came up, not even close to our stop, and reached our second target and third target because the entry came above the first target right here. So this worked out pretty well. You can take a look once again and confirm how potential those levels of the targetings are once price touches and reverse from it. So these are very powerful. Every day we provide those. They are extremely highly calculated, and once again, the benefit is that we confirm those with the big time players when we receive those numbers, as I am part of a mentoring group myself, and so we get access to those big what we call reactionary numbers, levels, and so on and so forth, and we compare those with all the calculations that we do and choose those who coincide one with each other, and that's the reason you see this amazing results every time that they hit, and we see some reactions from those levels. All right, so this trade actually provided us with about 14 pips and then 41. So this was a very profitable trade. Okay, back to the 4-hour chart, see what's going on. Obviously, this is a nice setup towards the upper side. You see, it's already kind of reaching the top formation right there. So I think we might have, once again, I think we might have one more opportunity to participate in this market. Now, the only thing that is getting my attention out of the way, which I probably gonna stay out for now, is as follows. The market, let me see if I can just show it to you. Once again, this is pure training. Here's the sideways situation coming from the huge downward move, right? Remember? Now the market entered like a doldrum area. There was doing absolutely nothing. Now we're waiting for price action. The most important high is this guy right here. And it has been taking out finally over here. All right. Now this low came from this high, making this low the important one. The market make a run for it, but failed to take the most important high. Came down, failed to take the most important low, indicating the potential of the reversal. It's towards the upper side when drawing the triangle. See how price action works out? Now this close above and beyond the latest pivot high here is a first level of warning, but they did not take the previous low, indicating we're still kind of in a sideways situation. By then the cross of the moving average is here, but we need to see a clear cut above and beyond this price structure right there. And let me just label it, and you can see here how the prices finally around this area gave us a probable go earlier this morning. Now this was a big time frame pivot step, and it was broken at the same time, so that was a dual confirmation to an upper movement right there. Confirm. Okay, so let's see. Based on the triangle, remember the targeting. We take the width of the triangle, that's 91. Show you the power of this. Where the break came in was right in here. So we're talking about 91 points of move. And long and behold, almost right here at the top, right here, the 90-point move. And that's where the market held as we speak. See how powerful this is? I mean, it's amazing. All you have to do is just take a little bit of a patience and practice, practice, practice until you get it. In terms of identifying price action, where to measure the pivot step and go from it. So now that we have that, we might try to look for an opportunity to go long. I'm more keen not to trade it, but since everything is perfectly executed right here, I'm going to start counting waves to see what's going on. So this is the lowest that is coming from, and this is the high, and the high came from here. So I will count perhaps this as one wave right here. Two. So this probably could be like wave 1, 2, 3, 4, 5, but it doesn't. Why? Because I really learned that once they break out from the clutter in this area, which is this high right here, this low translates into the beginning of the counting waves, meaning this could translate into wave 1. These ones are from the sideways situation. I mean, there's a lot of people who will probably disagree with me, but if you're in confusions about this, there's one easier way out, which is go one time frame higher. There you go. So in this time frame, we can see one run here. This is definitely a wave 5, 3, or 1. That's basically what it is. And I need to see where the sideways actually ended. So if you notice, the market make this pivot high, low, sideways, sideways, retest that high, but it failed to take it, and this is a breakout. My point of view is this is definitely a wave 1 into wave 2, 3, 4, and 5 wave up. If that is the case, we need to find where we can just draw and identify potential reversal points. All right, we're back, and it's a little bit awkward today in this terms. Quite difficult to identify those levels. Finally, we got the numbers out. Once again, it's more probable as a market pulling deeper into this area and sideways. Once again, I don't feel that comfortable, and the 4-hour chart indicates pretty much a clear path of what we're talking about, reaching like an accession point. But nevertheless, price action rules, so we're going to follow it through. A synergy zone pullback between 97.87 and 97.35 being that the reversal point, with the highest intention or conglomerate of buyers, big time buyers at 97.54. Now after that, we're probably going to see a run through 98.57, 98.78, and 99.19. So these are the numbers so far that we have for dollar yen. The market definitely rally up like gangbusters today. Everything positive all across the board, but we're never sure about the U.S. market going on. So you know how that is. But this is basically the blueprint that we're looking for. I preferably would like to see a pullback to the 97.55 area, but not closing below 97.35. If that happens, it's going to be absolutely great for us. I'll wait for some pivot, draw the resistance line with the pivot step, wait for the breakage. Below this point is going to be my stop loss, and I'm going to keep targeting the same levels here. Or when I make 20 to 40, liquidate half of my position, move to break-even point, and manage accordingly my trades. This is Carlos Diaz from Day Trading, the emini.com, and for side effects, and I'll see you on the next video.